The US job market has been shifting for quite some time now, but recently, we're starting to see some cracks forming, and those cracks are becoming hard to ignore. Interestingly, one positive trend is that Americans who are switching jobs are actually earning more than those staying put. I'll explain that in more detail shortly. But what's really concerning are the numbers we're seeing now, levels we haven't experienced in over 2 years. And yes, that's a major red flag. So if you're wondering whether your job will still be there in the next few months, or even the next few years, this is definitely a video you'll want to watch until the end. Before we dive in, do me a quick favor. Hit that like button if you appreciate timely updates like this. Now, let's get straight to today's report. Main report. A new report just released this morning shows that private sector hiring rose by only 37,000 jobs in May. That's the lowest increase in more than 2 years, according to ADP. Let's look at the numbers more closely. Payrolls increased by just 37,000, which is well below April's already revised 60,000 figure. Even more shocking, it came in far under the Dow Jones forecast of 110,000. Again, this is the weakest monthly gain ADP has reported since March 2023. And yet, despite this, some headlines still claim that the job market is booming. Just recently, I reported that job openings have increased compared to a few months ago. So why aren't employers hiring? This is the contradiction that's frustrating millions of Americans. Upcoming government report. This ADP report comes just 2 days before the official non-farm payrolls report from the Bureau of Labor Statistics. That one is expected to show a gain of around 125,000 jobs with the unemployment rate holding at 4.2%. We'll know for sure very soon. Industry breakdown. Now here's where things get more detailed. Goods-producing industries saw a net loss of 2,000 jobs. Mining and natural resources dropped 5,000. Manufacturing fell by 3,000. Only construction showed an increase, adding 6,000 jobs. Why construction? Well, many Americans are turning to new builds as a potentially more affordable alternative to buying existing homes. Builders and contractors are racing to finish developments, even at a loss, just to sell properties before the market declines further. If they can't sell, they risk going under. On the services side, leisure and hospitality added 38,000 jobs. Financial activities increased by 20,000. But those gains were offset by a loss of 17,000 in professional and business services, a decline of 13,000 in education and health, and 4,000 fewer jobs in trade, transportation, and utilities. Wages. Job changers versus job stayers. Here's a critical piece of data. If you stayed in your job, your annual pay likely rose by about 4.5%. But if you switched jobs, you could have seen an increase of 7%. That's a 2.5% advantage for job changers. This trend highlights why many are making career moves right now. Political reaction. Former President Donald Trump reacted to the weak jobs report, posting on Truth Social that it's too late, and urging Federal Reserve Chair Jerome Powell to lower interest rates. Trump noted that Europe has already cut rates 9 times, while the US has not budged. However, Powell appears to be in no rush to change policy. He wants to see more data before taking action. Geopolitical update. Trump also mentioned the difficulty of negotiating with Chinese President Xi Jinping, saying that reaching a trade deal, especially one involving tariffs, won't be easy. China originally agreed to a 30% tariff, but they may now be aiming to reduce that to 0. So, whether any meaningful agreement is on the horizon remains uncertain. AI and universal basic income. Now here's something big that's flying under the radar. One major reason for the slowdown in hiring is the rise of artificial intelligence. More businesses are replacing human roles with AI systems, faster than many expected. In response, several U.S. cities and states, like California, New York, Colorado, Washington, and Illinois, have launched Universal Basic Income (UBI) programs. These aim to support residents in a future where traditional jobs may not be as plentiful. This could be a glimpse into a new social contract as AI continues to reshape the workforce. Conclusion. So where does this leave us? Right now, There are a lot of unanswered questions about the direction of the US economy. But in the coming months, we'll start to get some much-needed clarity. I'll keep tracking all the latest developments and bring you updates as soon as new reports come in. If you found this helpful, don't forget to like the video, and consider subscribing so you don't miss the next one. Thanks for watching, and I'll see you in the next update.